Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn Associates with your financial market update, and this is for Thursday, the 21st of December, 2017. We're about 4:15 p.m. Central Standard Time. Well, the stock market was a lot stronger, and then going into the close, we saw a number of the markets give back some of those gains, but it's still a strong day. You were up in the gold, lost a little bit in the silver, and, you know, no matter how we look at currencies and other markets, let's all understand something, that you're at Christmas. Some of the markets start closing as early as noon tomorrow in the agriculture sector. A lot of the markets go to their regular time. But the traders, well, they're peeling out very quickly out of everywhere. The city's getting emptier as Christmas is approaching, believe it or not. And you have to keep that in the back of your mind with trading. Christmas is an international holiday, so all over the world, the Christian people obviously are going to be celebrating. So if you think you're going to get a lot of trade out of this Sunday or Monday or whenever the electronic markets open, pull back a little bit on those thoughts. It'll probably be very thin trading. You don't know. There can always be a geopolitical event, but barring that, probably rather quiet. The good news, the S&P, look at this market. For the week, you're up another 34 points. Is what I said. It's a vacuum cleaner. It takes money from everywhere. This is also the Santa Claus rally that you're in. And it certainly held true. But the Santa Claus rally began, I'm laughing, it began last November when the president was elected. And it really, once it got over this 18-week moving average of closes, it didn't look back. You had a recent correction this November. You can see that. But if you go back, you really got to keep going back to see when you were under that 18-day moving average of closes. It's happened occasionally, but not very often, which is so unusual. Now, we're getting some distribution right in this area, as you can see in the chart action here. You're still in a pattern of higher lows, higher highs. If you take out 2679, you'd break that pattern. But as I'm saying, I don't know what that's going to mean, as you're just in this holiday type mode. Assuming that happened, and if the market fell, one of the support zones would be 2658, let's call that. You've hit the upper Bollinger Band 3 days ago. You've backed away from it. You can go back up there again if the market continues up. And the momentum is locked in. What do I mean by locked in? You know, in my charting course, I teach a lot about slow stochastics. I was fortunate. I knew the gentleman well that created him. George Lane used to have him on a TV show I had called Stocks, Options, and Futures many years back. But my advantage over so many people, be it Fibonacci with Robert Precht or Bollinger Bands with John Bollinger, I got to meet all these people, and I got to ask questions. And if you know anything about me, if you've met me, I ask a lot of questions, and you learn. And in slow stochastics, they don't only measure is momentum going up or down, or is the market getting overbought or oversold. It also can tell you if the market converts from being overbought or oversold to locking in a trend. And if you believe, as I do, that momentum leads price, well, you can use this indicator for it. So far, the momentum is still locked in because both numbers are going sideways over 80. You're not overbought. You locked in a bull trend, and you can see that in the market as it's sitting there. In the NASDAQ, you still have a reading of 83. If you get under 80, you get nervous. This market got up to its Bollinger Band 3 days ago as well, backed off from there. Should it take out 64, 63, you might be headed back to the 18-day average of closes. You most likely in that event would see this red line get under 80. Until the red line's under 80, it isn't there. So you've still got a locked-in bull trend. Same in the Dow. But all of them have the red line slipping back underneath. As you can see, they're blue. They're called a K and D line. And they whip around each other. I want to use that term, I don't anticipate it, but I sometimes know enough about it to tell you, okay, there's a warning sign. Let's assume the market closed sharply lower and the red line's just hanging around 80. When it reopens, the way the math goes, it's probably, if it opens steady to lower, going to come out of the embedded. I'm not getting those signals here. I'm just not getting an edge on it. So far, momentum up, trend up, but this market hasn't hit its upper Bollinger Band in a long time. It's happening in the other indices, and even the Russell joined the parade today of getting back to its upper Bollinger Band. The pattern, though, is one of, we had lower lows. Now we've got a high that, with this high, that today's high was 1555.70. Didn't take that out, so we still have the lower low. So you've got not a bull pattern. You've got a lower low and a higher high. Nothing there just yet. In the VIX, you're bouncing away from the lower Bollinger Band area, and the momentum in this market, if we look at all this, both numbers are under 20 today. Both numbers were under 20 yesterday and the day before. So we have what's called a conversion from being oversold to locking in an embedded reading, and you'll have an idea that a rally's underway when and if the red line pops itself over 20. This is one of those situations where I'm watching. And why? Because 1949 and closed how you did in the better part of the day's range, open steady to higher, you probably get that red line over 20. Could be a sign the markets are going to take some profit tomorrow. Don't know. In TLT, you've gone from the upper Bollinger Band to the lower Bollinger Band. As I pointed out yesterday, you were underneath it. This market is one of those that likes to stay in the Bollinger Band, so the odds favor that the market would move to the right. Now, moving to the right doesn't mean it has to rally. It did, but it didn't have to. All it had to do is move to the right-hand side of the Bollinger Band. In this case, you got a bounce in an oversold market that has got a higher high and lower low and a sharp thrust to the downside, as somebody apparently just did a flip around or got caught, because this market really came down $4 very fast. T-bonds were doing the same as the TLT ETF, from the Bollinger Band high to the low, and it too moved to the right-hand side in an oversold condition. The 10-year notes over this. Now here's what I'm watching in the 10-year notes. You've got the higher high and lower low, but if we step back like this, we have basically a market with a slight bias to the downside, but mostly sideways action. And the fact that all of a sudden it's pushing on that gives an idea that interest rates are going up at this point. Obviously, this ties itself to ideas or perceptions about the tax bill going in the law. What does it mean for stimulus? What's that going to do for the economy? It certainly didn't hurt the market to see third quarter GDP today come in at 3.2%. In fact, all the economics data has been pretty darn good. And retail sales, they're looking to me like they're going to be pretty good, because I keep listening and I'm hearing that a lot of the stores are restocking, and yet the Christmas rush to get another day or two. So it's going to be very interesting here. In any case, down and away you go, still very much under the influence of higher rates. Dollar index, trend is down, not up at this point. Lower highs, lower lows. If it were a normal trading day, I'd be saying bears might even get more aggressive, but it's going to be so light, I don't know anybody will do anything much in these markets. But if it does break down, the lower Bollinger Band is support, and as I pointed out yesterday, the resistance is the 18-day average. Near-term support's the 100-day in the green at this point. In the eurocurrency, you got the flip-flop. You've got a bull trend. Higher lows, higher highs, momentum still pointing up, but the momentum here did get overbought. I view a reading over 70 as overbought, and we'll talk about that in a minute. In the March Aussie dollar, seasonally speaking, and there are seasonals that work or have in the past worked in currencies and that you look at, infusions of money, year-end. It was very difficult to get dollars just a few days ago if you were a foreign bank. You get these crazy actions at year-end. But this currency's had some good news for it. China easing its credit doesn't hurt this at all, because so many of the raw materials China buys is from the Australia. And on a seasonal basis, it often, I wish I could say always, that's not what I'm saying, often works its way higher at this time of the year. The yen is still in a bear trend with lower highs and lower lows, but oversold, resistance back at the 18-day average of closes. Bitcoin. You know, I don't know enough about Bitcoin, how it trades yet, other than to say that on the daily 15-minute bar chart, it acts like any other commodity that I watch. No different. Yeah, it's more volatile. This market's down to 15,370. It was just over 21,000 a few days ago. Volume is gradually coming into the market. I don't think you can judge anything launching a product right in front of Christmas, but it's been steady. That's the good word. I don't know how many firms are yet allowing short sales, so I can't answer if that's going on. I'm watching a ratio, though, of the full-size Merck contract to the CBOE, and I'm looking to see is there some spreading going off. I haven't come to the conclusion there is or isn't yet. In the Brent versus the WTI crude, as long as that pipeline is out at the UK, it's called the 40s pipeline, there's problems because you're missing 450,000 barrels a day that travel through that pipeline. When they'll get it fixed, all I heard was yesterday that the materials had been made, they were being dropped off. That tells us nothing how long it takes to repair the pipeline, but that's keeping a bid of the Brent versus the WTI. Here's the Brent oil. It hit the upper Bollinger Band. If you knew nothing else in a sideways action, what would you think? I would think that's a resistance point. And so far that's been the case. In the WTI, you've got an uptrend, the resistance point, 58.64, overbought, but still mostly sideways action in all these energies. They're just starting to develop more sideways action than they are spiking up and down. In the Rebob, you're in an uptrend. Can it reach up to the upper Bollinger Band? If not, well, then support's back at the 18-day average of closes, the way we look at it. And in the Nat Gas, you still have this embedded bearish reading. That rules the day. And prices have just been consistently falling down. Remember, you put up or you drill a well, what's the product? You're either getting oil or gas, right? Or sometimes both. And obviously, if they're drilling a lot more out there, then you're getting a lot more gas, and I think that's what the chart action is saying. I'm not a fundamental trader, but that doesn't hurt to think about it. I want to remind you about my reports, my daily market research that we have, and my charting course, and that's really the key. In my charting course, what I'm constantly doing is trying to teach you the techniques that I'm using. There's 5 indicators that we review. And they are the swing lines, moving averages, slow stochastics, the Bollinger Bands, and window envelopes. Now, the course normally retails, and it's all online. It's 6 hours of online videos, and then you get the charting software, and then you get my research where I review with you what's going on. And in January, I am going to start holding the live webinars again. I've been saying that for 2 months, but I've been so swamped. But to make a long story short, if you can master 5 indicators, and that's not that hard, one balances on the other. They're filters on each other. They're meant to not find trades. Did you hear what I just said? It's meant to give you a reason not to make a trade, and if you find that nothing there says don't make the trade, it's another way to look at it. Well, you've got a trade in front of you. Doesn't mean it'll work or not work, but you're going to learn risk. You're going to learn how to measure it before you enter a market. You're going to learn what happens when a market starts moving in a vertical or a sideways action. How do you determine that? It's pretty easy, and you'll see what it does. If you like what I say here, how could you not like this? The course normally is $109.95. It includes $99 worth of the charting software. That's 30 days access. My research, which is $60 a month, all for the $109.95, but with the word XMAS, you get $30 off that. Just type it into the coupon area. How do you get it? Go to our website, go under the word education, you'll see the charting course. If you want, you can click up here if you're watching me on YouTube. And of course, the easiest thing is during the day, call my staff tomorrow. They'll get you all set up. In any case, I'm Ira Epstein. Have a good day. I will be here recording videos tomorrow, and then I'm going for Christmas like everybody else, and I'll be back Tuesday. You have a good day. See you tomorrow.